Greetings, tax tip lovers, and welcome to this week's top 5 top tips in just 5 minutes. Come listen up, tax tippers, to news from the oldie tax tavern, where there was some tasteful maths debating as to how best to tax plan for Asian clients who've invested in UK real estate. We were asked for a second opinion on lifetime inheritance tax planning proposals prepared at great expense for Rav and his family, who were originally from India. Well, the most important word in anyone's property tax journey is tax. And alarm bells rang loud when Rav referenced loopholes and insider secrets. And I could find absolutely no comfort in the section of his report marked comfort. What had been proposed to Rav might be described as the Hindenburg of tax strategies. Well, I had perspective to spare that day, so decided to take a leaf out of Ronald Reagan's book and elected not to exploit our opponent's youth and inexperience. The answer may be simple, but the solution is complex and involves the unusual concept of domicile. Individuals originally from India or Pakistan may be able to significantly mitigate UK inheritance tax by using the highly beneficial tax treaties with the UK, and double tax agreements effectively override the law in both countries. Okay, here we go. Let's unwrap this with a little help from Noel Harrison with the Oscar-winning soundtrack to the Thomas Crown Affair from 1968, as we count down the 5 steps. Static at this week's number 5 is like a circle in a spiral, like a wheel within a wheel. On the face of it, mitigating inheritance tax on death can be difficult with UK property portfolios, but there are lifetime planning opportunities in UK legislation. Down at this week's number 4 is never ending or beginning on an ever spinning reel. Hardworking individuals who pay all their taxes during their lifetime often find it difficult to understand that their estate will pay another 40% tax on death just to pass their lifetime's legacy to their kids. Just inside this week's top 3 is like a clock whose hands are sweeping past the minutes of its face. Typically, when we explain the situation, older family members often want to mitigate inheritance tax, but also keep control of their assets. A new entry at this week's number 2 is, and the world is like an apple whirling silently in space. There are tax-efficient ways of co-owning property portfolios to aim to mitigate inheritance tax on death, while ensuring family members who created the legacy keep control and, equally importantly, keep the rent to use as income. Staying at number 1 is the all-time classic, like the circles that you find in the windmills of your mind. Properly constructed and using legislation which has been around for decades, it likely is possible to pass all or some of your property portfolio to the next generation without losing the benefit of the revenue you may wish to continue using as income. Better still, mum and dad or gran and granddad avoid the risk of properties being sold against their wishes or without their consent. Back in the snug at the oldie tax tavern, there's broad agreement that the most important word in your property journey should be tax, and that using legislation is a far safer strategy than working with those who serve up solutions based on loopholes and insider secrets, typically garnished with a highly dubious offshore trust arrangement. If that's what your tax planning relies on, frankly, it sucks. Remember, rules have consequences, and I highly recommend the barge pole approach. Okay, that's it. Now it's time to take action to sort your property tax planning, and here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or You can follow the link above and discover the power of a free hour's review with property tax experts who are ex-PwC and ex-HMRC and will make your property tax planning like it was our own. And that's our take on how Asian clients may be able to undertake tax-efficient inheritance tax planning. So, volume up, time to let Noel Harrison tell it better than I ever could. All right, stay bright. Catch you again for breakfast next week. Ta-ra.